You use this almost every single day, but you've probably never stopped to think about what actually happens when you pay. Because in less than a few seconds, your money travels through an entire hidden system. Banks, networks, security checks, all working together instantly. And once you understand how this really works, you'll never look at money the same way again. So in the next few minutes, we're going to break down the most common payment methods in the simplest way possible. And trust me, some of these work very differently than you think. Let's start with the most basic one, cash. Cash is the simplest way to pay for something. You give physical money, and the seller gives you the product or service. No banks, no apps, no systems in the middle. It's direct, instant, and works everywhere. And that's exactly why cash has been used for centuries. Even today, millions of transactions around the world still happen using cash, especially for small, everyday purchases. But here's something interesting. When you pay with cash, there is no digital record, no trace, no history. It's completely anonymous. And while that can be useful for privacy, it's also one of the reasons why the world is slowly moving away from it. Because digital systems allow more control, more security, and easier tracking. But cash also has clear limits. You can lose it, it can be stolen, and once it's gone, it's gone. So while it's simple, it's not always the most practical option anymore. And this is where things start to change. Let's move to something most people use every day. Debit cards. A debit card is directly connected to your bank account. When you pay, the money is taken immediately from your balance. No delays, no borrowing. You can only spend what you already have. And that's what makes debit cards so powerful. They help you stay in control. There's no risk of going into debt, because once your money is finished, you simply can't spend more. That's why billions of people use debit cards for daily purchases. They're simple, fast, and widely accepted. But now, this is where things get interesting. Because not all cards work like this. Credit cards. A credit card doesn't use your money, at least not immediately. Instead, you're borrowing money from the bank. You pay now and settle the amount later, usually at the end of the month. This gives you flexibility. You can handle emergencies or make larger purchases even if you don't have the money right now. But here's the catch. It doesn't feel like you're spending real money. And that's exactly why it's dangerous, because it's very easy to spend more than you actually have, without realizing it. And over time, that can turn into debt. So if we compare the two, debit cards give you control, credit cards give you flexibility, but that flexibility comes with responsibility. And not many people realize how big that difference really is. Now, let's look at something slightly different. Prepaid cards. A prepaid card is exactly what it sounds like. You load money onto it in advance, and that's all you can spend. No more, no less. Once the balance is finished, you need to reload it, and this makes prepaid cards very useful for specific situations. For example, online shopping, because even if something goes wrong, you're only risking the money you loaded. They're also popular for budgeting or for people who don't want to use a traditional bank account. Simple, controlled, and safe. But now, let's move away from cards completely, because not all payments require something physical. Bank transfers. A bank transfer is when money moves directly from one bank account to another. No cash, no card, just digital movement. This is what's usually used for things like salaries, rent, or large payments, and it's considered one of the most secure methods. But here's what most people don't see. Behind the scenes, your bank is communicating with another bank through a secure network, verifying the transaction, checking the details, making sure everything is correct, and only then, the money is processed. Sometimes this happens instantly. Other times, it can take hours or even days, depending on the system being used. And this is where payments start becoming more automated. Direct debit. A direct debit is an automatic payment. You give permission to a company to take money directly from your bank account, usually for things like bills, subscriptions, or recurring payments. And once it's set up, everything happens automatically. You don't need to do anything. Sounds convenient, right? It is. But here's the problem. It's also very easy to forget. You might have subscriptions running in the background, taking small amounts of money every month without even noticing. And over time, those small payments add up. So while direct debit is powerful, it requires awareness. Now, there's something very similar, but with one key difference: standing orders. A standing order is also automatic. But this time, you are in control. You decide how much money is sent and when it is sent. For example, you can send a fixed amount every month on the same day. So the difference is simple. Direct debit is controlled by the company. Standing orders are controlled by you, and that small difference actually matters a lot. Now let's move into something you probably use all the time, without even thinking about it: contactless payments. You tap your card or your phone, and it's done. No PIN, no waiting, just a second, and the payment is complete. But what's really happening here? Contactless payments use a technology called NFC, which stands for Near Field Communication. It allows your device to communicate wirelessly with the payment terminal. And what's crazy is, this entire process happens in less than a second, faster than you can even realize it, which is exactly why it feels so effortless. And this is one of the biggest reasons why digital payments are growing so fast. Now let's look at something simpler again: gift cards. A gift card is basically a prepaid card limited to a specific store or brand. It has a fixed balance, and you use it until it runs out. It's often given as a gift instead of cash, and it's widely used both online and in physical stores. Simple idea, but very effective. And finally, there's one method that works a bit differently: cash on delivery. This means you pay only when the product arrives, not before. You order something online, and you give the money when it's delivered. This is still very popular in some parts of the world, especially where people don't fully trust online payments. And it adds a sense of security because you only pay when you actually receive the item. So now, if we step back for a second, all of these methods may seem different: cash, cards, transfers, automation, but they all do the same thing. They move money from one place to another. Some are instant, some take time, some give you control, others give you convenience. But here's the bigger picture. We've gone from physical cash to fully digital payments in just a few seconds. And this system is still evolving, faster than most people realize. And once you truly understand how it works, you're not just using money anymore. You actually understand it. And that changes everything. But this is only the beginning. Because in the next video, we're going to explore how digital payments and new technologies are completely changing the way we spend money. And trust me, that's where things get really interesting.